Hi there, my name is Gift Zulu. I am the Chief Financial Analyst at Global Financial Advisory and Consulting Company. I will take you through real estate investment Zambia and be able to guide you on your decision whether to invest, hold, or avoid. So to begin with, let's look at a brief background of what real investment Zambia is. So real estate investment (REIZ) is a publicly listed property investment company on the Lusaka Securities Exchange. It has got origins tracing back to the 1920s and a formal transition into real estate through Farmers House Limited in 1981. REIZ focuses on acquiring, developing and managing commercial and residential properties across Zambia, including landmark assets like Arcades Shopping Mall and Central Park in Lusaka. In 2024, it became the Zambia's first ever real estate investment trust, committing to distribute 75% of its annual distributable income to shareholders, thereby enhancing transparency and investor appeal. With a lean operation structure and strategic portfolio, REIZ plays a pivotal role in shaping Zambia's urban commercial landscape while aligning its reporting and governance with international standards. So the market position of REIZ as of 2024 is that it completed major acquisitions including Lewanika Mall, Jacaranda Mall and Acacia Office Park, expanding its portfolio to over 1.3 billion in prime assets. Its core operations center on property acquisition, refurbishment, leasing, and strategic asset management, with Napoli Property Development Limited contracted to manage its investment portfolio. One of the core accounting principles that REIZ follows are those of IAS 40 and IFRS 15. It follows these with particular emphasis on fair value for investment properties and has got a transparent revenue recognition aligned with IFRS 15. It also follows the straight line rental income REIZ it also follows straight line rental income, which gives evenly income over lease terms, smoothing out revenue across periods. We will delve deeper into these concepts as we analyze REIZ. So what are some of the implications of the accounting standards that REIZ chose to adopt? So the firstly is the volatility in the net income. Since REIZ uses a fair value model for investment properties, unrealized gains or losses from property revaluations flow directly into the income statement. Coming next, common size analysis. In 2021, despite high operating margins, net income was deeply negative. Common size analysis show us that impairments or valuation losses consumed a high portion of revenue. In the period of 2022 to 2024, the net income as a percentage of revenue surged, especially in 2024, which was at 3.418% due to fair value gains. But common sizing helps you isolate one core profitability from accounting distortions. High net income doesn't always mean strong cash flow, so smart investors will always look at operating cash flows and EBITDA to assess real earning power. There is a graph just showing you the debt to equity ratio and the debt versus equity as a percentage of assets, something that we normally do in the common size analysis. Finally, we have the operating cash flows versus the investing versus the financing cash flows as a percentage of revenue. So, with that has been said, should you invest? Well, our stance or our advice is that no, you should not. Why? Simply because the 2023 had the following red flags. The 2023 report shows that restated figures of fair value amounting to about 5 million being overstated in the 2022 annual report. This makes the analysis of the profitability questionable. Secondly, the common size cash flow show that REZ net income spikes, for example, in 2024 may not have matched by operating cash, which a red flag for dividend sustainability. And the use of fair value valuation makes REIZ highly volatile and affects a lot of other things in making significant changes in a lot of areas. So, with that being said, with the data that has been presented to you, Global Financial Advisory and Consulting Company hereby wishes to say that you must hold on your investment and not to invest your monies. Thank you very much for contacting us. We hope to interact with you soon. Thank you.